Good morning. Welcome to DelfinGroup Investor Webinar. We will begin with the company's presentation, after which we will address the questions submitted by participants. You're kindly invited to submit them in writing through the Q&A window below the presentation, or raise your hand and be unmuted after the presentation is over. For your convenience, the webinar is being recorded and replay will be available shortly after the session. Now, let me introduce today's hosts. Didis Admīdiņš, Chairman of the Management Board, and Andrais Aleksandrovic, Member of the Management Board and the CFO. Please, the floor is yours.
Okay, thank you. Hello, everybody. I'm Didis Admīdiņš, and today with me here is Andrais, our CFO, and I will present you audited results for 2025. And I will start with business performance, and later Andres will continue with financial results. And as always, we will answer to your questions at the end of presentations. Okay. Okay, I will start with key results. Basically, about 2025, the year itself was quite good if we talk about business performance and financial performance. And revenue increased by 24% and profit before tax grew by 35%. And that resulted on a return on equity of 35%, and the cost to income ratio was down to 40%. And about the last year, also there was that starting from second quarter, we placed an additional focus on cost discipline and operational efficiency, which further strengthened our profitability. That's basically how we achieved this result. And in parallel of that, we completed an unique transaction in Baltic capital markets with DelfinGroup becoming the part of Indexo. And we believe that will strengthen our strategic positioning looking forward. And let me briefly walk you through our key financials of 2025. If we talk about loan issuance, and there you see loan issuance of both our credit business lines and both countries. And loan issuance reached 134.8 million euros, and it was up by 29% on year-on-year basis, reflecting on strong demand across Latvia and Lithuania. And as a result of that, credit portfolio increased to 144 million euros, and that was up by 27%. And that actually exceeded our guidance by around 5%. Going further, about revenue grew, and that was in line with portfolio expansion, and that reached 78.2 million euros, and that was up by 24%. If you look at profit before tax, it was at a record level of 12.4 million euros and up by 35% on year-on-year basis. And you see that there is around 1 million euro one-time item in our profit before tax. But even excluding that, the run rate is significantly above previous quarters. Okay, and now I will move to business highlights and what will explain how we achieve these results. And I will start with cost income ratio and cost discipline of last year. And as I mentioned, from second quarter, we introduced some measures to improve our efficiency. And what we did, we basically closed our branch network in Lithuania. We had 7 branches across, not across Lithuania, it was all in Vilnius. And all together in Latvia and Lithuania together, we reduced our headcount by 42 FTEs. And more or less, we we shifted our focus more to consumer loans, and we take a bit off focus from pawn and the retail operations. But nevertheless, we are still focused on that segment, but we shift our focus a bit to consumer loans, and we more of mostly those personal decrease was in retail operations. And as a result of that, we basically decrease our administrative cost. And if we compare year-on-year basis, it was up by 4%. But if we compare quarter 4 to quarter 4, it was down to 9%. And that led actually to like improvement in cost to income ratio to 40.2%. And now I will move to our consumer loan segment, and this is like backbone of our business. And this slide corresponds to like both countries in consumer loan segment. And in this segment, we increased our issuance by 31% on year-on-year basis, and it was at 136.4 million level. And the growth was mainly supported by higher average loan size and longer terms in portfolio and at issuance level as well. And actually, we get this increase in issuance and increase in portfolio in both our countries. And if we talk about portfolio quality and non-performing loan levels, it was at 4.3% level. And actually, I can comment that it's below our like comfort level, which stands at around like 7%, and no, it's like below even 5%. Going further to Lithuania, and this slide corresponds to consumer loans only in Latvia. Previous slide was both our countries, and in Lithuania, our credit portfolio grew to 7.7 million euros, and I count that it's quite good first year. And as you know, 2025 was first full year of operations in Lithuania in consumer lending space. And talking about loan issuance levels, at the end of the year, it was at a level of 3.6 million euros. And at the moment, we are still calibrating our business model and our risk models. And after that, when we will be ready, we will push harder and increase our issuance levels. Going further to our pawn loan segment, and talking about pawn loans, they remained quite stable in 2025, and DelfinGroup continues to be a clear market leader in Latvia. And at the moment, we have around like 53% of market share in this segment. And the portfolio for us was stable last year, and I could say that pawn is like a steady and reliable part of our business. And as also you can see that in last year, the average loan amount increased, and that was mainly supported by gold price increase. And as you know, that gold price was up by more than 50% during last year, and actually it continues to grow. And our focus on this segment is not so much on aggressive growth, but improving like profitability and operational efficiency. And this part is like stabilizing part for our business and for our branch network as well. Going further to like retail of pre-owned goods, and in this segment we delivered quite solid growth in 2025, and the total sales was up by around 15%. And this growth was mostly supported by both like parts of this business, offline sales and also online sales. but mostly by online sales because online sales was up by around 25%. And in the year of 2025, online sales now corresponds about like 25% of total sales. And also in last year, we sold a lot of gold scrap. And of course, like increase this like high gold price was we were favorable of that, and we actually like sell gold by 4.5 million euros, like, and that actually helped us to like unlock free cash, which we can then later invest in credit portfolio or like for inventory. And yes, and going further to our branch network and talking about branch network, as you know, we are like operating extensive branch network across Latvia. Altogether, we have 88 branches and in 38 towns and cities. And last year was actually quite like impressive with like relocating, renovating, or opening new branch concepts. For example, we converted one of our branch in Liepāja to Banknote XL branch, and altogether we now have four Banknote XL branches. And what does it mean, Banknote XL? That basically is the branch with a larger floor space, and we can sell more like do more sales in these kind of branches. And as well, we like renovated some smaller branches and or relocated them. For example, we renovated the branch in Ogre, Tukums, and relocated the branches in Cēsis and Valmiera. And about the guidance of 2026 and going and beyond, and more or less our focus for years going beyond is to build the larger loan portfolio in both our countries, in Latvia and Lithuania. And as you know, that our backbone of our business is consumer lending. And mainly we will build this portfolio on this consumer lending space. But also we are planning to like introduce a new type of loan, and this is like home equity loan. And actually we plan to issue first loans very near term. Actually, I think we will issue first loans even in March this year, and that will be one of our new loan segments, which we will start very soon here. Another other new segment for us, which we are still like looking how to develop and how to go into this market, is the consumer loans to lower risk level clients, and that basically means like larger loan amounts to lower risk profile clients. And also like talking about our guidance and our strategy, our aim is to be cost efficient and keep our cost income ratio below 45% or even below 40%, and to keep our equity, like return on equity level above 30%. And now talking about our shareholder structure, and as you know, in December and January, Indexo completed both like voluntary and mandatory share offering of DelfinGroup shares, and now Indexo Group holds 71.52% of DelfinGroup. And today we have almost 8,000 shareholders, and I could say that being a part of Indexo Group, of course, like delivers us like broader platform and like strategic synergies of both those groups. And also, I forgot one thing, that in this like guidance slide, that this like guidance doesn't actually include like potential synergies of both companies in like let's say DelfinGroup in Dexel Group, and we see that as like potential upside. Okay, and with that, I will now hand over to our CFO, Andres, who will walk you through the financial performance in more detail.
All right, thank you, DJ. Good morning, everyone. So did cover the main events in the business in 2025. Let's have a bit closer look how it reflects in our numbers. So very strong year for DelfinGroup. We exceeded the guidance, which was 25% growth, and seemed fairly ambitious goal when it was set and reported. Top line grew by 24%. Our largest business line is consumer lending, which constitutes around 71% in 2025 of our total revenues. That part of the business increased by 25% year on year. And also we had an increase in pawn and retail businesses, which combined increased by 21% in 2025. While cost of sales increased 38%, this is only due to the mix of sales, where larger part this year comprised of the gold scrap sales, and those gold scrap sales doubled the amount in 25 versus the 24. And obviously those sales have a significantly lower, however, still very healthy margin. If excluded the gold scrap sales, the margin on the other sales remained very stable, did not decrease. In fact, it slightly increased in 2025 compared to previous year. The increase was 1% increase in the margin. Credit loss expenses. Yeah, this line of expenses did exceed both increase in portfolio growth and consumer loan income. However, we see already improvement of this position in second part of the year, and we expect we will maintain this positive momentum also into and through 2026. Interest expenses, financing costs show favorable trend, increase of 17%, but compared to the increase in consumer lending of 25 and portfolio of 27%. So our cost of interest-bearing liabilities really decreased this year, and we will see that in a later slide when we look at the financial ratio slide. Did this already mention our cost discipline, something that we worked on in 2025 a lot. Selling and admin lines are the ones affected the most. We became much leaner organization, and that really helped us to increase our operating leverage, which ultimately resulted in profit growth by 35% year on year, as to compare for the gross profit, which increased only by 16%. There were two larger one-offs that we wanted to highlight. The first one is VAT or value-added tax refund for the prior periods starting from 2022. We worked during the 2025 with the advisors from one of the big four advisor companies. We consulted the State Revenue Service, and we actually got a refund cash in bank during Q4. So that was one of that. And the second one-off is really a correction of a phasing of our revenues for 2025, and which resulted in a one-off positive impact in Q4 again. But even excluding those one-offs, DelfinGroup did record best ever result for both full year as well as one quarter in Q4. Quick look at the balance sheet. Total assets up 28%, mainly driven by net loan portfolio, which increased 27%. Inventory is down 26%, but that's largely on a sale of gold scrap. I mentioned I mentioned already, and also we have a continuous focus on increasing our retail efficiency and stock turnover. So the increase in assets were financed by mix, by both really, by our equity increase, which increased by solid 21%, retained earnings up 39%, driven on the exceptional Q4, obviously, and also funded by interest-bearing debt or interest-bearing liabilities, where we actually have achieved some reduction in costs. I mentioned that in the income statement, but also we're going to see that in our financial ratios on the next slide. Yeah, so financial ratios, let's jump straight to the cost of interest of bearing liabilities. This ratio now at the end of 2025 sits at the 10.1%, which is down from 11.1 at the end of 2024. So really a reduction of 9% from 11 to 10, which further allows us to improve our leverage. All the ratios, all the remaining ratios are calculated on 12 months figures, and all of them improved, suggesting that we have managed to course correct during 2025. Our EBITDA up to 35% for the year. Return on equity also reached 35%, while interest coverage ratio is at comfortable 2.1, and equity ratio closing on 25%, with both well above our covenants, which are 1.5 and 20% respectively. Cost income ratio already discussed by Didzis, so moving on. Capital markets, still three major pillars of our external funding. First, the bonds. In 2025, we launched a new 25 million bond in September, which we finalized in early this year and already listed on the exchange, currently trading at a small premium. We also redeemed in full bonds maturing in February 2026. Not on the slide, but mentioned in our financial statements post-balance sheet events, we had 1.2 million put options exercised by our bondholders after change of our shareholders, which triggered change of control clause. I must say only 1.2 million in put options out of possible 30 million. So we want to express our gratitude toward the investors who maintained and showed confidence and showed trust in our company and remained invested with us. We will settle those put options, those 1.2 million put options, later this week. Banks, we renewed and extended our cooperation with our good partners from Multitude Bank, and our total exposure is almost 30 million as of today. And of course, Mintos slightly decreased in position. We had some excess liquidity, and we just managing financing costs, we reduced our position there. However, Mintos remain a significant partner for us, and we see this continue going forward. Sorry. Our capital structure on the left side did slightly change due to the events I just mentioned. If we jump to the schedule of maturities, so excluding Mintos, we had maturities of 35, almost 36 million this year. 11 million bank loan we already refinanced with the Multitude Bank, and maturity moved to 2028. And we redeemed 10 million of bonds, leaving 15 million with maturity this year. Well, actually, after this week, when we redeem the puts, we will have a little less than 40 million maturities remaining. So already by now, we have cleared more than a half of debt maturing in 2026. And of course, we're going to be working on putting plans to refinance remaining amount. Well, actually, we already started. And in 2027, we will have one bond in total amount of 25 million to refinance. So we have now 5 active bonds remaining, all listed on the exchange. Dividends, yes. Since we had a record profit for a quarter, keeping to our dividend policy, we will pay, well, at least we'll propose to pay a record high dividend payout to our shareholders for Q4 2025, which will bring total dividend yield to 8.9% this year. Dividends for the last quarter is almost 4 cents. None of our previous dividends had even come close to this. Next largest were actually last quarter in the Q3 2025 and were around little more than 2.5 cents. And about our share performance, yes, obviously also impacted by the change in shareholders with us joining Indexo Group. The price offered by Indexo in voluntary and then mandatory offering was 1.3 euro per share. Positive for investors who kept DelfinGroup shares, also that price have remained and even slightly appreciated since then. And plus current shareholders can reasonably expect that almost 4 euro cents per share in dividends can be paid in Q2 2025. Yeah, I guess then I'm through my slides and we can go to Q&A session.
Thank you. Yes, indeed. Let's start the interactive part of our call, the Q&A. Participants, please submit your questions either in writing through the Q&A window or raise your hand and be unmuted. We will start with the questions submitted prior to the call, then we'll prioritize the audio questions, and finally continue with those submitted in writing. Our first question: are there any plans to expand to Estonia, Poland, or other countries?
Okay, I will cover this one. At the moment, we are with licensing process in Romania, but not that actually not covered in our guidance, and we don't have any plans to open about to open about other countries at the moment.
Thank you. Can you comment on the taxes for a resident of Latvia?
All right, so on the dividends, we don't withhold any taxes. And similar regarding the bonds, when we pay the coupons to investment accounts, we don't withhold any taxes. However, if paid to the security account, we have to withhold income tax. But if you have investment account, then there is no tax. Well, withheld by us.
Thank you. About dividends, will dividend policy stay the same with the new majority shareholder Indexo? And what amount is planned to be distributed in dividends for Q4 2025?
Okay, Andres already covered about dividends for Q4, and it will be close to 4 cents for share. And about the dividend policy, as mentioned during this share offering from Indexo, they don't have any plans to change the dividend policy, and it remains as it is.
Thank you. As I don't see any raised hands, we will continue with the questions submitted in writing. What are the main drivers for Q4 loan volume decrease? Are those internal decisions or external factors?
Yeah, I will cover this. We can look in other side of this. For example, quarter 3 was actually not like ordinary quarter, but it was extremely good quarter for us. And the quarter 4 was a bit lower than quarter 3. And there was like some months in quarter 3, especially in Latvia, where we had like special promotions to issue loans. That was the reason why the quarter 3 was exceptionally good. And then like quarter 4 was back to like the route where we are like developing our issues. That's more like that.
Thank you. Continuing with the questions submitted by the participants, is there any update on the potential banking tax refund in Latvia? Will this tax still be present in 2026?
If this is meant that about paying the tax on a profit, then we don't anticipate any changes. At least I haven't heard of any developments that it could be cancelled in 2026 or in foreseeable future.
Thank you. Do you plan to scale down the retail branch network further in 2026?
We don't have exact plans to scale down the branch network, but we don't plan to increase the count of shares. Sorry, the count of branches. There could be some that we close some branches in some smaller towns, but not that decrease will not be like significant. Maybe we will close some 1 or 2 branches.
Thank you. Now we have received several questions on the same topic, so synergies between DelfinGroup and Indexo. Have there already been any actions from DelfinGroup or Indexo to unlock synergies between the two companies? And if so, could you elaborate a bit on these? Also, how will this affect your cost of capital, and when could that be?
Yeah, I will start, and maybe then Andres will continue with cost of capital. About the synergies, yes, we already are like doing some like cross-sale activities, and we actually see quite okay development in terms of that. And basically that works like that Indexo are offering their service to our customer base. And as you know, we have quite large customer base, which we have developed since the beginning of DelfinGroup. And yes, we are offering like Indexo like services to our clients. And maybe you can.
About financing and cost of capital. Yes. Well, this is obvious synergy to be expected when we join the Indexo group, right? We are working towards it. But we don't have already any synergies in place. We do expect some in 2026, probably on the second part of the year, and then increasing for the years to come. But obvious something that the place where we're gonna look for the synergies for sure.
Thank you. A follow-up on the same topic. Will those synergies be mainly on Indexo side or DelfinGroup? If Indexo and DelfinGroup will share clients' data, then how will you decide who will issue a loan to the customer, Indexo or DelfinGroup?
I could say it could be more that we will like offer like Indexo products to DelfinGroup customers. But if you look from a customer perspective, I think that should work, and I believe that will work like that we need to offer for client what needed for client. If client needed like mortgage loan, which is like something similar to large banking product, then of course it's more like an Indexo product. But if it's like a smaller consumer loan, the product which we are offering, that it could be on our side. That's mainly what's beneficial for for customer and what needed for customer, because our products are not so similar. We are both operating in lending space. We both know how real estate loans. We both have consumer loans, but the products itself is not so similar, and we are operating in different spaces actually.
Yeah, and just to add about the synergies and the financing, whether it's going to fall on Indexo or DelfinGroup side, I trust it's going to be on both. It's going to be both beneficial for Indexo for be able to finance us, as well as us will benefit from the fact that we expect to get this financing at the better rates. Yes.
Thank you. And there's also a follow-up question, the potential impacts on the P&L from the merger.
It could be on both sides because, for example, if in the future, if Indexo will fund our company, it will be on both sides because we can decrease the capital cost, and for Indexo, it will be a very good place where to invest.
About the funding, will Indexo help you with funding of the company? Do you expect to refinance existing bonds prematurely? If not, are there any plans to issue new bonds this year?
Yeah, I'll take this one. We don't have plans now, as we said, to refinance any bonds prematurely from Indexo funding. We plan for the issuance of the new bond this year to refinance the bonds that we have maturing in February in 2026. And obviously, the company expects also to grow, not only to refinance existing bonds. So Indexo financing will help for us in achieving that, right? So they will finance also the growth of the company, more focusing on that.
I see. There have been quite significant savings for operating expenses in the last 2 quarters. How do you see OpEx development going forward?
I'll take this one. Yeah. We definitely gonna keep working on our costs. So while costs might increase going forward, there's an inflation and all those and all that, but we definitely expect that we will increase our operating leverage by costs increasing slower than we can grow our business.
Thank you. Currently, the final question that we have received at this moment, credit loss expense decreased quarter-over-quarter. What were the drivers for this decrease?
Yeah. So there are two. One is really the phasing of the revenue that I mentioned, so that impacted it a little. However, also the actual cost of this cost decreased because we managed to improve our LGD, or loss given defaults. We do sell certain non-performing loans, and we improved the contracts regarding the sale of these loans. And actually, to add to this, we were kind of prudent in the approach. The improvement came in the second half of the year, while we still, when calculating the provision, we've calculated 12 months average. So improvement, we took only improvement for the couple of months of 2025. This is why I said that we expect this level to be stable and improve into 2026 and throughout 2026.
Thank you. All questions have been answered. That concludes our Q&A session. We appreciate your time and interest, and we will be looking forward to welcoming you in our future events.
Thank you.
Okay, thank you, everybody.